All right. Good evening, guys. Good evening. I believe you can hear me clear. Um, so what's up? How is everyone? How is learning going? How is the assignment? First of all, I want to commend every one of us that have been doing our assignment. Although there are many things I need to correct in your assignment, but then I want to first of all encourage you. That is why you see I give everybody that submitted their assignment thumbs up, because it is a good thing to show effort in the first place in doing your assignment. It's a very good thing. It's a very good thing. So in this video, I'll be saying a lot of things. So I will advise right now, you need to get a pen, you need to get a paper so that you can jot things down. So I'll be starting from the very basics of our technical analysis. Like I told us, there are basically two analyses we do in the market to know when to buy and when to sell. There's what we call the fundamental analysis. That is when we use fundamental news, events, economic strength of a nation to gauge each country's currency, to know whether to buy the currency or sell it. For instance, the protest that is happening in Nigeria, if you are an investor now, you will know that the economy of Nigeria will be dropping because of the protest. Many people can't go to offices, so therefore our economy will not be at its average, not optimum, at its average. So you know that the Naira will be dropping massively in the global scale. So what you want to do with the Naira at such a time is to sell the Naira. You want to do away with it because you know there's no value in the Naira. So you will not be buying a currency that you're already looking at it, that this currency is going to drop. So that is what we call fundamental analysis. Gauging whether to buy or sell a currency based on the happening around that currency, based on the occurrence in nations that are using that currency, or based on any news. And this news could also be natural disaster. For instance, when the Hurricane Katrina hit Haiti, the time it hit Haiti, nobody will be buying the Haiti currency because you know that this country is just suffering natural disaster, so their economy will be at its lowest. So that is what fundamental analysis seeks to do. It seeks to help you gauge a country's currency based on happenings in that country. Then we have what we call the technical analysis, which is what we do. The technical analysis is an analysis that is based on the facts, which is now becoming a truth, that history always repeats itself in the Forex market. You want to jot this down. History always repeats itself in the Forex market. What is that? Where a particular currency stops buying and starts selling in the past is a potential place in the future where that currency will also stop buying and start selling. What do I mean? For instance, a currency has been on what we call an uptrend. It has been buying. Let me show you this scenario. So I am doing a full recap. That is why I said this class is going to be a full class. Let me do a particular scenario. Look at this now. This currency from here, it stopped selling and started buying. Look at how far it bought. It bought to this level. Let me even start from here. It bought to this level. It bought to this level. You can see it kept on going up, although it had no currency goes up smoothly to go up, come down, go up, come down, go up, come down. Let me even say where there was a major turn. It went up to this point. This was the point it got to. Go up, come down, go up, come down. It bought. This is gold. This is gold. Because gold is also a metal. It's not a currency, it's a metal traded. It's one of those things I trade. So you can see this currency, this is a support, if you agree with me. This is a support, what I taught you guys. This is a support. This is a support in the market. Let me make this tick. This is a support. Why is it a support? It hit it, could not continue down, went up, came back, hit it, could not continue down, went up, came back, hit it, could not continue down, went up. Then this is a resistance where the market stops buying and started selling. So this is a resistance here. This is a resistance. You can see how that the market hit it. Now, like I told you, history has the potential of repeating itself in the forex market. This gold came down. It had a reversal. It came down from this spot. It hit this spot, and it came down to this place. Came down to this level. It came down to this level. Now, why did it stop at this level? I told you guys something in one of those videos I did. I say places that was a support or resistance. If that place was a resistance, that is, it was a resistance like this. A resistance is a ceiling. If it was a ceiling in the past, there's every tendency it can be a floor in the future. That is a support. Look at this place. The market came, hit this place, could not continue going up, came down. That means this place is a resistance, right? Now, is a resistance. Price hit it, could not continue going up, came down, hit this place, was able to break it here, went up. Now see how that this resistance here, let me do something. This resistance, this is a resistance R. This resistance here became a support S. It became a support here. So this is what we'll say history always repeats itself in the forex market. That is why you must know how to draw your support and resistance. So if I was in this kind of a market now, as this opportunity, this market hits this resistance and it came down, I'll be looking for an opportunity to buy gold here. Why will I want to buy gold here? Because history always repeats itself. In the past, it was a resistance. In the future, there's every potential it can be a support. And it cannot only be a support, it can also be a resistance. Now, this is a resistance here. This is a resistance here. This is a resistance here, right? This is a resistance here. It was able to break it here a little bit. I'll still come back to this. It was able to break it here a little bit. So I'll be looking for an opportunity at this resistance. Now, what do you do at the resistance? You know that a resistance is a roof. It's going to come down. So I'll be looking for opportunity to sell. That is why I said there are forex trading, you trade based on confluence of confirmations. Because it's a resistance only does not mean I will sell. I will not sell because it's a resistance only. There are other things I will want to look at that will make me sell. E.g., candlestick formation. How many of us are reading our candlestick Bible? There's a way a candlestick will form that it will confirm that that resistance is a resistance that we hold. What does it mean for a resistance to hold? It means that resistance will reject price and price will go down from the resistance. There's a candlestick formation I want to see at a support that will confirm to me that that support will hold. What does it mean for a support to hold? It means that that support will reject price and price will start going up from that support. There's something I need to see, apart from the fact that this is a support, there's something I need to see in the way these candles form that will confirm to me that this support will hold and price will go up. So at this point, I'll be looking for an opportunity to sell because this is a resistance. Immediately I see that candlestick formation, I'm going to sell. Do you see how it danced around this area and dropped down? Came down, got to this point, danced a bit, came back up to the resistance. See the way it hit it here, could not continue going up, started going down. So this is the basis, excuse me, please, sorry. This is the basics. This is the basics for support and resistance. Excuse me, please, let me quickly erase this. Please give me a moment to erase this thing. All right, let's just leave it. So this is how support and resistance work. Support and resistance work on the basis of the fact that history always repeats itself. So this is a resistance. This is a resistance in the past that became a support. a resistance in the past, it was a resistance here, it became a support here. And I can go on and on and on to show you instances in this chart where a resistance became a support. Let me do that. Let me do that briefly before we go into what we have today. This is why this class is an extensive one. Let me extend this. Let me extend this here. Good. Now, you know very well, this is a resistance here, right? This is a, let me not even go too far up. Let me stay around here. This is a resistance. So let's draw our resistance. This is a resistance here. Let me draw from here. It was a resistance here. It was a resistance here. Let me write it. It was a resistance R, resistance here. It was a resistance here. It was a resistance here. It was a resistance here. See that? Now see here, under here, under here. Look at this. Or let me not even use that. It was a resistance. Even here, it was a resistance. It did like it has broken it, but it didn't go far. It was a resistance here. It was a resistance here. Do you see how this one resistance here, history always repeats itself. So every time you see, once you see price coming towards a resistance, the next thing you want to look for is your candlestick formation. Once you, I will be getting to that. We'll be getting to that. Once you notice a particular candlestick formation that is supporting the fact that that resistance is going to be a sure resistance, it's going to push price back down, you will take a sell. You will sell from here. Because I told us that when you go in the direction the market is going, you make money. So if the market is coming down and you are buying, you'll be losing money. But if the market is coming down and you are selling, you'll be making money. So at every resistance point, you want to look for those confirmation, those confluence to sell. So when price hit that place, you want to sell. Every time price comes to a resistance, you want to sell. Every time price comes to a support, you want to buy. So now look at this. So this is a resistance, this is a resistance. See here. What is it here, guys? What is it here? What is it here? Price was dancing on top. It was a support here. X. It was a support here. So you can see that it was a support in history past. It became a resistance, became another resistance in the future, became another resistance in the future, resistant. Now look at this here. This one actually broke down. This is only news. But here, it was a support here. Support here. Support here. Support here. Guys, what was it here? See, blue candle form. It broke it down. Blue candle form went up and dropped down. What is it? A resistance here. Future resistance. 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 Support, support, support. Resistance, resistance, resistance. That is how the market plays out. This is the basics of price action, technical analysis, and it is the best analysis. But then for you to be a good trader, you combine both fundamental analysis, what is happening in a particular country that owns that currency, you combine it with your technical analysis to build your confirmation further. To build your confirmation further, you combine both technical analysis and fundamental analysis. You combine the both of them. So I just showed us how support and resistance works. So at support, you are looking for candlestick confirmation to know that the support will hold for you to go for a buy. At resistance, because support is a floor, and when a ball bounces against a floor, it goes up. So you want to go in the direction the market is going. You want to be buying when the market is buying, and you want to be selling when the market is selling. The moment you are buying when the market is selling, or you are selling when the market is buying, you are losing money. And there's every tendency price will go and hit your stop loss. So when price is coming to a resistance, you are looking for a candlestick formation to confirm that that resistance will hold for you to go for a sell. Because at resistance is a ceiling. When a ball hits the ceiling, it comes back down. That is how the market behaves. So now let me remove all of this so that we'll do what we are doing today. Please give me a moment.
Bless the Lord, oh my soul. Sing the name of the Lord. Are you covering it?
All right. So right now, let's go to what we have today. We are actually going to be looking at trend line. Let me quickly type it. We're going to be looking at trend line. This is what, oh, no, this is wrong. That spelling is wrong. Trend. Let me write everything in caps lock. Trend line. Beautiful. Trend line. Now, what are trend lines? What are trend lines? Now, let me first do a very basic definition. You know, when you look at this chart, you will notice after this trend line, we're going to be looking at structure. I'm going to be doing an introduction into structure today, market structure. So let me even add to this, not just trend line, but trend line and structure. Let me see if I can edit this. All right, beautiful. Trend line and market structure. We're going to be looking at trend line and market structure. All right, beautiful. So now, earlier I taught you guys support and resistance. Support and resistance are horizontal line, isn't it? They are horizontal line. They are just two straight lines that tells you where ceiling and floor. Ceiling and floor. That is support and resistance. Now, trend line seeks to show us slanted, or let me say it this way, trend line is a slanted support and resistance. Support and resistance, generally, you know them, they are horizontal. Trend line is a slanted support and resistance. That is, it is slanted sideways. It's a slanted support and resistance. And one particular feature of a support is always at the bottom. Support is always at the floor. So you have a trend line that shows you that is slanted at the floor, and you have a trend line that is slanted at the top, which is a resistant trend line. So we have what we call resistant trend line, and we have what we call support trend line. We have what we call resistant trend line, and we have what we call support trend line. We have what we call resistant trend line, and we have what we call support trend line. So now, how do we draw a trend line? This is my 4-hour chart. Like I told you, The minimum time frame we do our analysis is 4 hours. After trend line, market structure, I'm going to be teaching you time frame for analysis, what we call top-down analysis. We're going to be doing that. So you see that we have a lot of things, but you should be excited because I'm taking it gradual and your foundation is becoming thick and thick. If you follow me, you'll be a beast of a trader. Now, this is where you come to. You come and click on this trend line. Now, I want to draw my resistant trend line. I want to draw what I call my resistant trend line. I click on trend line. I click on trend line. And from, you know the way you draw support from the peak. This is my resistant trend line. I need 2 or 3 peaks to touch. 2 or 3 peaks to touch. I might not want to use this. Let me show you. You can draw as many as possible. All right, beautiful. Okay. So this is my first. This is point number 1, point number 2, and point number 3. So this is how you draw. You need minimum 2 points in the market to touch. You need minimum 2 points when you are drawing. This is what we call resistant trend line. Because why is it resistant trend line? Because it is above. You can also draw from this point. Let me draw from this point. You can also draw from this point and you drag it. You drag it. Do you see this? It got close here. It got close here. It touched here. It touched here. Do you see that? So this is how you draw your resistant trend line. Now, apart from your, so after drawing your support and resistance, now this is area where I'll be teaching you confidence. Now look at this. Let me show you something briefly. This is a support, isn't it? This is a support that became a resistance. So let me draw my line. Now see, there is what we call a confluence of support and resistance here. It is a resistance, and also on the normal resistance, I thought is a resistance, and on the trend line is a resistance. So you should know that we have double confirmation here that makes it a strong reversal level. A strong reversal level. That is a strong level where the market has every potential to go back down. Why? Because it is not only a resistant line, a resistant level, resistance zone, rather, it is not a line, but also a trend line resistance. Look at it, this other trend line resistance. Let me show you another one. Look at this one here. Look at this one here. Look at this, guys. A support here, support here, support here. Look at this. Look at this. Look at this, guys. Look at this. Let's draw another one. You can choose to even use this place. It's a resistant here, right? Resistant here. See, guys, do you see how there was a confluence? Trend line resistance and normal resistant line. So this is what I'm teaching you gradually. So this is how you draw your resistance trend line. Please, your chart should not be noisy. Don't put too much lines on your chart. Your chart should not be noisy. Now, if you ask me which of this resistant line will I want to use, both of them are serving a good line, because this one is serving a good purpose. This other one is also, if I remove this one now, let me remove this one, let you show something. So this one is even serving a better purpose. Why is this one serving a better purpose? Because this one has more lines, that more places that the market is touching it. So I will choose to go with this. I'll choose to go with this. I'll just adjust it like this. I'll just adjust it. So 1, 2, 3, 4, 5, 6 places in the market that the market touch this my trend line. And this is what we call a downtrend line. This is what we call a down, D-O-W-N, downtrend downtrend line. This is a downtrend. Let me remove the line. This is a downtrend. There's no space in between them. This is a downtrend. Why is it a downtrend? Because you can see this place is high. This place is lower. It's forming staircase like. I'm going to be teaching you, when I'm teaching you market structure, that's when you'll be understanding this. You'll be understanding the downtrend and everything better. So this is a downtrend. Then this is a downtrend, and this trend line is what we call a resistant trend line. Why is it a resistant trend line? Because it shows us that the market is going down, and it is also a point where the market hits it and goes down. Every time the market hits the trend line, it always goes down. What makes it a resistance? Anytime the market hits it and it goes down, that place is a resistance. And what makes it a support? Anytime the market hits it and it goes up, that place is a support. Now let us draw support trend line. I'm getting excited. I love what I'm doing. I love teaching Forex and I love trading Forex. Now let's look at this. Look at this, guys. Do you see this? Let me change the color. Let me change it to red. Or let me change it to purple. And let me make it a bit thicker. All right, beautiful. Do you see this, guys? What do you notice? Every time the market hits it, at this point, the market hit it, went up, came, hit it. Now, how do I draw it? I just need 2 points. I need point, this is point A, so that you will not be waiting. This is point A. I need point A, and I need point B. Once I get these 2 points, I draw my line using these 2 points. Let's say all these ones have not happened yet. All these things here has not happened. Once I get point A and point B, I use point A and point B to draw my trend line. Make sure it's just touching it at the peak, or it just goes in a little bit. Point A and point B. You will see anytime you see the market coming back to that place with some candlestick formation, you should look for an opportunity to do what? To buy. Because what you do as support, you buy at support. Do you see, if you had bought here, you'd have made money here. You buy here, you'd have made money. You buy here, you'd have made money. So you see how you can be buying and be selling. And how do you draw your resistance? You also need only 2 points. Point A here and point B here. This is the only 2 points you need. Once these 2 points touch like this, you draw your line with these 2 points. All these other things don't need to happen. You wait for these ones to happen. So anytime you see the market, let's say you were in the market when this happened, and you drew your trend line, you drew a very long line, and then the market came, it touched it here, it touched it here. Now you are waiting for it. Anytime in the future you see it come close to that line, what do? You sell, because at resistance you sell. Imagine you sold here. Look at this, guys. You sell. Look at this. Look at how this thing came down. How much you would have made for you selling. And then you need just 2 points, point A and point B, to draw your support trend line. Once you draw your support trend line, every time it touches your support trend line, you buy. Every time it hits your resistance trend line, you sell, as far as other confirmations still meet. Do you see this? Do you see this, guy? So this is how to draw trend line. So this is what we call our, this is what we call this one here. This is your downtrend. This is what we call up, up trend. This is up trend. Up trend. And when I'm teaching you market structure, you understand why it is an uptrend. So this is an uptrend because it is going up. It is going up. And this is a downtrend because it is coming down. This is an option. Now, this is a lot of information. I think I'm not even going to introduce market structure today, because this is a whole lot of information already. This is a whole lot of information already for you guys. So this is how we analyze the market. So you can see that gold has been on a what? On an uptrend. See, it got to this point. It has been on an uptrend. From this point, it has now been on a downtrend. Then here, there's a small uptrend here. But this is just not really an uptrend. And as we go in, see, you cannot understand Forex is 1 month. You will need practice upon practice upon practice. practice upon practice is what you will need to understand this thing. You need practice to understand this thing. So this is what we call trend line. This is how you draw your trend line. So now, like my style of teaching, I like taking things poco a poco, gradually. I thought I could introduce market structure to you guys, but with what I'm seeing, I can't even introduce market structure. So now let me just do some little more things. So when you draw your trend line, you want to also draw your support and resistance. So let me draw my support and resistance. Now I'll make my support, I'll make it white. I'll make it white. Let me reduce the thickness. It's too thick. Let me reduce the thickness. I'll make my support white and I'll make my resistance red. So, but let me draw all my, no, this is my resistance I'm drawing. This is a resistance I'm drawing. Let me draw another resistance, guys. Look at this beautiful thing. Look at this, guys. A resistance here is a resistance here. Do you see how it is a resistance, normal resistance, and it's a trend line resistance? Now let me draw, all right, this is a support here. This is a support here. This is a support here. Look at this, guys. It is a support here. You need more than, this is a support here. It is a support here. Look at how it is a resistance here. Colliding, confluencing with your trend line resistance. There's a confluence. So whenever you see a confluence, two confirmation, two things confirming that there's a potential that this and this will happen here. Guys, attack it, take it, because it has higher tendencies going to happen. There's higher tendencies going to happen. Look at another, look at this, guys. There's a resistance here, right? Resistance here. So you draw your resistance line. What's happening? Let me draw my resistance line. See this, guys. See this here. See this. See how it collides. See this. Normal resistance and your resistance trend line. Now let us draw for support. Let me draw support. Let me change this to red. Now, support here, right? Support here. Support here. Let me draw. All right. This is a support. Let me even just draw it from here. Look at this. This is a support here, right? Uh-oh, so this thing is drawn here. Let me pick it. Look at this. Guys, look at this. Support. Do you see the close to collideness here? Showing support trend line, then this is your trend line. This is a resistance here, right? Resistance that became a support. When you draw it, is a resistance here. Resistance here. It became a support here. See how it collided with your support trend line. So this is, you are now entering technical analysis. For those that want work, this is work. So now I want you to watch this video over and over again till you understand the concept I'm doing. We are going to do market structure in our next video. The next video might even come tomorrow or next. Before Thursday, the next video, market structure video will come. Watch this. I want you to do it on 5 currencies. Draw your support, resistance, downtrend line, and uptrend line. That is your resistance trend line and your support trend line. Neatly. I don't want to see lines everywhere, please. Neatly. All right. I wish you guys all the best. Please, I'll be expecting your questions. Take care, guys.